All right, next up, viewers, let's look at all the market action from the past week and the cues to watch out for in the week ahead. Let's start with the US markets. Well, they ended a 4-week losing streak on Friday, closing slightly higher after a volatile session driven by options expirations and trade policy developments. The S&P 500 rose 0.08% on the day and 0.5% for the week, while the Nasdaq gained 0.52% on Friday, adding 0.2% weekly. The Dow advanced 0.08% on Friday, posting a 1.2% weekly rise. Stocks recovered from session lows after comments from Donald Trump suggested some flexibility on upcoming tariffs. European markets closed lower, weighed down by weakness in the travel sector after the closure of London's Heathrow Airport. The pan-European stocks 600 declined 0.6%, with the CAC 40 and FTSE 100 down by similar margins. Germany's DAX lost 0.5%. Travel and leisure stocks fell 1.6%. I repeat that, 1.6%, with airline stocks under pressure. And then over to Asian markets. Well, they saw mixed performance, with Hong Kong's Hang Seng Index falling 2.19% and China CSI 300 down 1.52%. Japan's Nikkei 225 lost 0.2%, while the Topix gained 0.29% to extend its winning streak to 7 sessions. South Korea's Kospi added 0.23% for a 5-day rally, though the small cap Kosdaq slipped 0.79%. Indian markets rose more than 4% and recorded their best winning week in 4 years. Crude oil prices were supported by a new OPEC Plus plan for additional supply cuts, with 7 members agreeing to trim output further to offset prior overproduction. These reductions, set to last until mid-2026, will counterbalance upcoming production increases. The plan follows Washington's latest round of sanctions targeting Iranian crude oil shipments, which analysts expect could reduce exports by around 1 million barrels per day. Then gold fell over 1% on Friday, retreating from record highs as the US dollar strengthened. However, the metal still posted its 3rd consecutive weekly gain, up 0.7%. Spot gold settled at $3,014 an ounce, with US gold futures at $3,021. Investors remain focused on geopolitical risks and potential Federal Reserve rate cuts, which markets are pricing in for July. All right, looking ahead, traders will be watching global central bank comments, trade policy developments, and further signals from the Federal Reserve on the timing of the rate cuts.